Disclaimer. All contents, ideas, opinions and information shared or implied herein are for informational and educational purposes only. Hello everybody. Welcome to Sunny the Eggman YouTube channel. In this video, we will be revealing on the fundamental analysis for IREIT Global, its strategic review and recent financial results. Before starting, please help to share and subscribe this channel, as your support is our biggest motivation to continue on producing quality contents. Being the first Singapore-listed REIT with portfolio in Europe which is used primarily for office, retail and industrial purposes, IREIT Global is listed in SGX since August 2014. Its manager, IREIT Global Group Pte. Limited, is jointly owned by Untitled Capital and City Developments Limited, CDL. Untitled Capital is a global alternative asset management group listed in France, while CDL is a leading global real estate company listed in Singapore. To date, IREIT Global's portfolio comprised of 5 freehold office properties in Germany, 5 freehold office properties in Spain and 27 freehold retail properties in France. As of the 31st of December 2020, the total lettable area is approximately 273,000 square meters with portfolio value worth €719.6 million. The portfolio occupancy rate is also improving from 94.6% in 2019 to 95.8% in 2020, despite the surge of COVID-19 pandemic. Its market capitalization is approximately 749.74 million Singapore dollars currently. Firstly, we will be looking at IREIT Global financial statements for fundamental analysis. The revenue for IREIT Global is decreased since 2017, but it has shown improvements from €35.3 million in the 31st of December 2019 to €37.8 million in the 31st of December 2020. Also, the net property income is increased by 7.3%, from €30.7 million in 2019 to €32.9 million in 2020. The increase in revenue and net property income is mainly arising from consolidation of operating results of the Spanish properties in the financial statements of the group, followed by completion of acquisition of remaining 60% interest in Spanish properties from Untitled Capital on the 22nd of October 2020. In terms of distribution per unit, it was dropped by 18% from 2018 to 2019 but improved by 5.5%, after restating the effect of right issue for 2019 distribution per unit, in 2020 due to completed Spanish acquisition. For both FY 2019 and FY 2020, IREIT Global distributed approximately 90% of its annual distributable income. Next, the total assets for IREIT Global increased from €636.4 million in 2019 to €769 million in 2020, mainly due to higher valuation of assets from €574.9 million to €587.9 million, which is contributed by uplift in the valuation of German properties and consolidation of Spanish properties. For total liabilities, it is also increased by 16% from €282.1 million in 2019 to €327.3 million in 2020, mainly due to increase in borrowings of the group. Even though the net asset is increased by 24.7% from 2019 to 2020, it is showing that the NAV per unit reduced from 0.56 in 2019 to 0.47 in 2020, mainly due to increase in the total number of outstanding units in issue arising from right issues completed during the year. Now we will be revealing on the strategic review on this REIT stock. The stock price is trading at 65 Singapore cents as of the 5th of November 2021, which is increased by approximately 10% as compared to 1 year ago. It is currently traded lower than its NAV of 76 Singapore cents by 15% as of the 31st of December 2020. However, if we are looking at the 5-year stock price trend for IREIT Global, it is actually remains constant from 0.6446 Singapore dollars in November 2016 to 65 Singapore cents in November 2021, with the peak at 79 Singapore cents during February 2020. It shows a significant drop to approximately 37 Singapore cents during the start of the pandemic in March 2020. The decrease in stock price is sales of IREIT Global units in a fortnight by China tycoon Tong Jin Quan. He had offloaded 8.2 million units in IREIT Global for 4 million Singapore dollars in March 2020. Also, the overall occupancy rate is dropped by 3%, from 98.6% as of the 30th of June 2019 to 95.7% as of the 30th of June 2020. In terms of distribution per unit, it is consistent since 2017 but experienced drop by 11%, from 5.64 cents in December 2019 to 5.03 cents in December 2020, if not taking into consideration of the right issue in distribution per unit for 2019. Lastly, let's look at IREIT Global unaudited financial results for second quarter ended the 30th of June 2021. The gross revenue increased by 31.6% in first half 2021 as compared to first half 2020, mainly due to the consolidation of operating results of the Spanish properties, following the completion of acquisition of the remaining 60% interest in Spanish properties on the 22nd of October 2020. In line with gross revenue, net property income also increased by 23.4% as compared to first half 2020. In terms of distribution per unit, it is increased by 17.3% as compared to first half 2020, after taking into consideration the effect of the Reit units in the forward foreign currency exchange contracts entered into to hedge the currency risk. For balance sheet review, IREIT Global is showing an increase in total assets by 4.4% mainly due to the increase in fair value of investment properties. Its NAV per unit as at the 30th of June 2021 is 80 Singapore cents while the stock price is at the 30th of June 2021 as 0.635 Singapore dollars. This means that IREIT Global is an undervalued stock which traded at 20.6% discount to its NAV. Also, it is worth mentioning that the acquisition of 27 retail properties located across France, Decathlon portfolio, had been completed on the 28th of July 2021. It will strengthen IREIT Global's lease profile and provide diversification to its portfolio. Based on the overall financial results, there is clear indicator that the post-acquisition of Spanish properties shows improvement on the financial performance, despite COVID-19 pandemic. To add on, its portfolio also enlarged by the acquisition of 27 retail properties in France on the 28th of July 2021. Also, it is currently trading below its NAV by 20.6%, which represent an undervalued stock to invest. However, there are some risk areas that might need to be taken into consideration before investing in this REIT stock. Due to the effect of Reit issues, the distribution per units are diluted since it spreads a company's net profit over a larger number of shares. Next, its debt to cash flow is showing increasing trend from 2018 to current, which peak at 2020, an increase of 26% from the 31st of December 2019. Another potential risk to consider is the substantial lease expiries over the next few years, as well as tenant concentration and geographical risks. As at the 30th of June 2021, IREIT Global presented major key tenants of 65.3% represent by two tenants, which are Deutsche Telekom and Deutsche Rentenversicherung Bund. The new acquisition of retail properties in France would be helpful in diversify the concentration risk. Lastly, the minimum holding period for this REIT is 2 to 5 years and the annualized return is approximately 8%, contributed by distribution received and capital appreciation. Hope you can have some valuable insights on IREIT Global after watching this video. Do comment and share with us your thoughts on the above points. Stay tuned and remember to share, like and subscribe our channel. I'm Sunny the Eggman. Goodbye.